Hey guys, so before I start the main video, I just wanted to give you a quick note on the tariff that has been imposed on India. So there are 5-6 key points that I will quickly take you through and then we will start the main video. So point number one is that this trade war or this imposition of very heavy tariffs, it's not going to create any major short-term impact on the Indian stock market because we have already formed a very strong base of roughly 25,000 Nifty levels. And most of our market is domestically driven, right? It's not as if that big foreign money is coming and all that. So net FDI in India is already very low. So I don't think anything major is going to happen on a short term. So this is one. Second key thing, right? When it comes to long term, there are serious problems at play, right? Why? Because if you just study the macroeconomic landscape, US and China have aligned their economy as per AI first. For example, China is focusing a lot on meeting its energy requirement. They are already kind of energy surplus, one could argue. US understands that it's not energy surplus, so they are started to explore topics like nuclear energy, how to extract energy out of it. All that stuff is happening there. A majority of the companies in the US, the top ones that you might be an investor in, for example, Google, Microsoft, all these companies are becoming AI first. So this is already happening. Unfortunately, no such work is happening in India. Now, one of the key troubles that will happen due to what's going to happen due to AI is that even America is going to re-industrialize. For example, they might build a lot of weaponry systems, ships, all this stuff. They are going to do all kinds of manufacturing because what AI does is that it allows you to create something called as gigafactories and mega factories at scale. And US already has a lot of land, so they will be building such factories. And one of the key restrictions or key problems in the last, let's say 20 odd years was that the cost of labor in America was really high. Now with AI, if things can be automated at scale and in these gigafactories, then the cost of production can be made to come down dramatically. And that hurts markets like India, because if you think about it from an IT lens, right, that okay, why did our IT grow? Because our labor was cheap, okay, or the IT labor was cheap. India was traditionally considered to be a low-cost labor market. Now that labor advantage, population advantage is going away, and it's going away really fast. So I really hope that some solution is built on that, because the intent from the Americans, intent from Chinese is very clear, and we are not partners with either of these countries. Their intent is that they will reindustrialize their bases, right? And they honestly don't need India. So India has to create its own capacities, abilities, and we are unfortunately in the market space, right? We are in a major transition phase, right? Because we have not adopted these policies yet. आप बातें बना सकते हो कि AI, we put like ATMs and trains, so we are like AI first or whatever crap, right? I mean, honestly, it does not matter. This is not AI, and a lot of useless money is being wasted, right, on a lot of important things. So we have to cut taxes. Maybe RBI will relax the monetary policy. It will impact our markets positively, right, from that lens. So some major changes have to be followed, right? A lot of money needs to be thrown at innovation, right? This needs to happen. These are all general topics that I'm speaking about, but yeah, as of now, right, I mean, if you're an investor, I would kind of say that it kind of makes sense to have like a decent cash bucket in India. I am personally like 35% uninvested. For example, if I have to put like 100 rupees in India, I have only put like 65. I'm staying afloat with 35. And I'll wait and watch, right, from that lens, right? So there is no rush with which I'm approaching. US, I have already invested quite aggressively, as I've been saying from January, right? It was quite clear that they are going AI first. My portfolio also needs to be AI first. So I would really encourage you to learn about all these things, right? I mean, if you want to learn about US stock investing, I'm putting some links in the description comment box. You can watch those videos. It's absolutely free, right? So please go and study these videos. It will give you more clarity. So with that said, let's move over to the main video. Hey guys, so for the last 1 year, the stock markets in India haven't been doing really well. For example, you yourself might have figured out that if you started putting money in SIP mode since last year, the returns haven't been that great. In fact, here are the returns for some of the top popular funds in India. And you would see the chart here, and you would see that, for example, if you consider large cap schemes, the returns are muted. You're making like 1%, 2%, something like this. If you adjust it for INR fall, the returns become actually negative. So this is not good. So this year has been really bad, 2025. In last 1 year, again, the returns have been like close to zero. So not that amazing. If you say that, okay, fine, these are large caps. What about like small caps? Maybe returns have been made there. Then again, a bunch of schemes haven't made any returns, to be honest. So long story short, last 1 year has been really difficult for investors. Anyone who has put in the money in the markets hasn't been really happy. So where do we go from here, right? Is this like a structural problem? What is it that investors should think? So I will divide this video into two parts. Part one, I will help you understand what exactly is wrong with the markets, more specifically, what is wrong with the Indian markets. Number two, that if you are an SIP doer or if you are an opportunistic investor like me, that we don't do SIPs, but we buy opportunities, then what is it that these two type of investors should do? So I'll give you like a very honest take on this entire conversation. And along the way, I'll give you some examples of index, some stocks I'll speak about. So please consider watching this video till the very end. And also if you enjoy the content, do subscribe to the channel, do like the video, and we'll begin. Okay. So let's discuss part one, that what exactly is wrong with the Indian market. So long story short, there is nothing wrong with the Indian market. Why? Because we are in what type of phase, right? So we are in consolidation phase. So what is the meaning of consolidation? So let me just quickly show this to you, right? So for example, this box type of formation, right? For example, if you draw a box here, right? So this was a consolidation phase. This started somewhere in like 2018 and this consolidation ended in like maybe like 2020. Okay. And after that, that was a drop. Okay. So one could say that this entire phase, which I'm highlighting in green, was a consolidation phase. This was a 3-year consolidation. Okay. Now, if you go again, you could potentially like, extrapolate this that, okay, this will become like a rectangular box, right? Maybe, and it might be a 3-year consolidation or 1-year consolidation, something like this. So far, this is like a 1-year consolidation. Will it go to 2 years, 3 years? I don't know. Okay. But point is that there is nothing wrong with the market. Consolidations are fairly normal. Okay. So let me show you like 2-3 more examples. So this is a consolidation phase. Okay. This again is a consolidation phase. So long story short, approximately 70% of the times the market goes sideways, right? This is very, very important. We as normal investors, we always believe that, if I'm buying the stock on 5th of August, from 6th of August, it should start going up like this. It doesn't work. Okay. Even the market does not work like that. So honestly, there is nothing wrong with the market per se. But having said this, you need to get a grip with your expectations. For example, last 4-5 years, right, in general have been good for the markets. Why? Because anyone who started investing money here in 2020, the market was at 12,500. Now it is at almost 25,000. So if you look at 5-year returns, we have done well. Congratulations. If you actually invested money in like 2020, like here, right? Or if you bought this dip, or if you bought any of the dips, right, you would have been sitting on good profits. So sensibly timing the market kind of makes sense, right? This is the bottom line that I'm telling you. So long story short, some of you guys will be looking for some kind of tips ki khareed le market, khareed le. See, yes. So technically, yes, right? We are here. So maybe it kind of makes sense to buy some stuff here. Okay. Why? Because you can see that this is like a fairly long phase, right? This from 2020 to now. Market has been going like this, right? And if you are a SIP doer type, or if you are like, you buy on the top, or you are a constant market chaser, then it's different because you will get trapped in that sideways market, that rectangular box thing that I was speaking about, right? So you might get trapped there. But as long as you're not buying the market top, you buy when market does not look exciting. For example, right now, you are likely to make 12-13% returns, right? So this is what I can say with confidence because this has happened substantially if you go back and study the data. So this has been happening in the past. We are in a down cycle of an upward moving market. Now this is an important concept, so I'll just take a minute to explain it. That what is the meaning of a down cycle of an upward moving market? See here, check the markets, right? So these have been generally going up, right? So I mean like this, right? They have been going up. So general path is that it is going up like this, right? But right now, what is happening is that for the last 1 year, right? I mean, yahan pe tha market, right? Now it is like here only, right? So hardly anything has happened. So we are in a upward moving market, but on its down cycle. Okay. So some stuff you can definitely buy here. This is what I would say. People keep on asking that, hey, is there something fundamentally off about the market? Not really. There is not fundamentally something off. But yes, valuations can be off from time to time, which brings me to the second point, that you have to check the valuations at the time of investing in the market. And one of the data points that you can track is called as forward PE ratio. Now, what is the meaning of forward PE ratio? See, forward PE means that you take the price of the market, right? And you estimate that what the total earnings of the market will be in the next 12 months, right? So this takes care of, and you will get a number. Like for example, you might get a number 30 or whatever that is. Okay, so I'll pull up the data and then I'll talk about it. But I hope that you got the concept of what is the meaning of PE, because we always think that, you know what, market is like 25, it is expensive. Some dude will come and then they'll say that no, 30 is like, you know, too inexpensive. And some will say that, you know, market, let it go to like 18,000. See, what you're looking here, 18,000, 25,000, 30,000, these are just price. Okay. It has like no value whatsoever. You have to see price in context of how much money can be made by companies in aggregate in the next 12 months. This is one of the most important data sets that is tracked by investors. This is very important. You need to understand this concept. If you don't know much, Google it, learn more about it. But long story short, you need to track this PE number. Okay. More specifically, this forward PE number, not trailing PE, forward PE. Okay. So if you are tracking this forward PE number, then what does the data tells us? So here is it. I have pulled up the data and the data tells us this. That right now, as of July 2025, India's PE ratio is 23 to 24 times. This is based on forward PE, okay? Now, if you look at the long-term average of the Indian market or India's PE, it is around 20.18, okay, in the last 10 years and around 17.67 over a 20 year. So 20 year chodo, like let's just go with the last 10 years, right, on an average. So right now we are still bloated, right? So long story short, now some of you will start getting angry at me that, okay, you know what, Akshat, you just said that, hey, we can buy like some amount here. And then you're saying that market is overvalued. See guys, I'm not talking about it from like tomorrow, okay, or in 1 month market will go up. Basically, the point is that if you're buying these down channels, right, or these down points, then over the next 2 to 3 years, your returns are going to be different than people who are buying here, right, at these up points. Okay, so these are all up points, right? All these points, right? So buying these blue dots will generate very different type of results compared to people who are buying these red dots. I hope that I'm able to explain it. It's a little bit complicated concept. In case you guys are interested, I do run a stock market batch. One of my live batches is coming up where everything is taught from scratch. I will gear that course both from Indian market and US market perspective. In fact, I have built a public US portfolio. It is outperforming almost all the mutual funds in India. You can check the returns here. People have been extremely happy. So my batches fell out fast. In case you guys are interested, this will run over 2 weekends. So I'm putting the links in the description comment box. You can sign up. Okay. So I hope that this point is clear that right now the market is overvalued. There is nothing wrong per se. Just buy the right valuation. So this is the third key point, that you just simply need to go and buy right valuations. Right now you can afford to wait. It's not as if that, you know what, suddenly like, you know, you'll miss all the rally and all that. If you are, now comes the fourth point, that if you are fairly invested, okay, fairly invested. Now, what is the meaning of fairly invested? For example, see, I mean, if you have been investing for the last, whatever, like 5, 7, 10 years, badhiya portfolio ban gaya, right? I mean, you have a big portfolio setting, right? And you are getting new money because you go to a job every month, you are making some money, right? And let's say that you wanted to put hypothetically 80% of your net worth, right, into the stock market, and that target has been achieved. What should you do? Well, you should wait. You should not do anything right now. You should not even buy this. Okay. On the flip side, the conversation changed dramatically. For example, let's say that you're a new investor. You have never put money in the market. Okay, your net worth invested in the stock market is like 0%. Should you go and buy now? The short answer is yes, you should. You can start buying here. Okay, no problem. So the answer changes dramatically depending on how much you are fairly invested. Now, who will tell you whether you are fairly invested or not? Only you can. Okay, so it's your decision how much money you want to put in the stock market versus gold, silver, versus cryptos, versus real estate, versus whatever like business you are doing, right? So it's your wish, right? You have to understand more about investment landscape, right? What kind of investment strategy kind of makes sense for you. But yeah, this is an answer that you need to have. Even if you go and speak with like wealth advisors or whatever it is, again, you need to tell them. They will not tell you that, you know, bhai sahab, aapko itna karna chahiye, right? I mean, they are not going to give you that clarity. You are the one who needs to have a grip of how much money that you need to put in the equities makes sense for you. Okay. So in my case, for example, I roughly put like 70% money in like equities, right? And around like 25% in real estate, 5% crypto. So that's what I do. Okay. Now, okay. So then comes the next point that, okay, you know, fine, like last 1 year, not much returns have been made. So then what's going to happen like next? Okay. So for this, you need to understand something called as investor trends, and something interesting is happening in the market. What that interesting thing is that people are chasing growth, or more specifically, educated investors are chasing growth. Now, what is the meaning of that, right? So let me take a minute to explain this concept, because this is very important, because it will tell you what type of market India is and whether or not you should put structural bets on India or not. Okay, so basically there are two types of companies. One are called as growth companies and the other are called as value companies. Okay, now growth companies are companies like, let's say, Meta. Okay, and you have Microsoft, you have like I think maybe Bajaj Finance, right? You have Nvidia, right, which has gone up like crazy. You have AMD, right? So all these companies are growth. Now, why am I talking about growth? Because they can go up like this, right? Why? Because think about Meta. If Meta launches like a new product, let's say some weird or interesting telephone or like, a wristband. Now, Meta has access to or distribution to approximately 2.5 billion people every single day use Meta products. For example, you use WhatsApp, you will receive a message from Meta, and then the adoption of that, whatever wristband that Meta has launched, it's exponential. So one could argue that Meta is a growth company, right? It can scale up new businesses really fast. It can do a bunch of things really fast, right? What about like value company? Now, value companies are more like legacy companies. Their business models are structural. They are like, sort of mellow, right? It's very easy to predict their business model. For example, Hindustan Unilever. In the US, you have a company called as UNH. It is available at very good discounts, I would argue, right? You have something called as Novo Nordisk. Abhi uski bhari pitai hui hai. Why? Because they are estimating a fall in revenues, etc., etc. So these are all your value stocks, okay? Now, so far, right, in the last 1.5, 2 years, what we are noticing, in fact, this is something that we are noticing post 2020, that there has been a structural shift to growth companies. For example, if I ask you that, hey, which 5 stocks have given like multi-bagger type of returns? You say Nvidia has given like, it has gone up like crazy, right? I mean, 100 times, right? Or whatever. Then you have like companies like Meta, which has gone 600% from their 2022 lows. In 3 years, it has gone 600%. It's a $1 trillion company. So long story short, these type of growth companies are doing exceptionally well. In case you are interested in learning more about small cap growth companies, I've spoken about these on this video. You can go check it out. It's a very good video. Please do consider watching it. You will learn a lot of new things. So point being that investors are running after growth companies and they are not chasing value companies. Okay. Now, natural question comes that, okay, how is this relevant for the Indian market? Okay, here is the problem, right? And which brings us to the next point, that in the Indian market, there are not many growth options. For example, if you consider something like Jio Finance, okay, or if you consider something like Bajaj Finance, okay, fine, these are like, one could argue that they are very scalable. Zomato, right? Maybe Swiggy, right? These are all scalable companies which might scale up like new products like crazy and grow at a really crazy pace. So we have very limited such options. Why? Because we do not have, or rather our companies do not have any tech superiority. For example, you would argue that, hey, Jio Finance tech is really good. Okay, it's not like, world-making tech. They are not like, they are not going to capture the world, right? I mean, it's very difficult for them to exhibit product innovation apart from that in the Indian demography. Okay, so they are not going to do much, right? So this is very important for you to understand. Zomato, Swiggy, fine, tech is great, good, right? But it's not like, you can't really compare it to like Nvidia and Amazons and all that, right? So long story short, what is happening is that, so in India, people are having severe shortage of growth companies. So by default, we have no other option but to go with these tried and tested business model, Varun Beverage, Khareed Liya, small cap mein and all that stuff. So what is happening now is, structurally speaking, that if you compare like growth companies in the US, they are outperforming even Indian small caps, right? So this is a structural problem which is happening, and you as an investor will need to make a call whether or not you need to buy like small caps or not. Which brings me to the next step. Let's see, it's very important for you to revise your thesis as an investor. Okay. Now, what is the meaning of revising your thesis? See, for example, many people believe that, bas SIP karte chalo, paisa banega. See guys, it does not make any sense. Why? Because if you are buying the market at 23, 24 forward P and the data tells us that, a fair price is 20, then what are you doing? You are buying it at bloated valuation. Now, in the long term, let's say 10 years, 20 years basis, you could keep your money for like 20 years on small cap or whatever. In the 20-year phase, let's say let on an average, small caps generate 20% CAGR, okay? But since you're buying the market at 23p, which is bloated, this return will come down, no? So this is the bottom line, right? So therefore, SIP doing needs to be done sensibly, right? So I've already given you technique. Please go and study it. Please accordingly, like invest your wealth, grow it that way, okay? So this is very important. Second key point is that, we always think that, small cap, mid caps will outperform large caps. So here you need to go and study macros. This is very, very important. It doesn't work that way. Yes, in the last maybe like, if you study like 2000 to 2010 phase, small cap, mid cap might have done really well, but the seasons change, right? So you again need to have some kind of investment thesis. So don't go by like tried and tested approach. You'll get tricked. For example, from 2021 phase, okay? A lot of IPOs have been launched, right? Which are purely being launched into the market to give founders an exit. And who is buying all this stuff? Retail investors. How are they buying it? Through SIP. Here is a post that I have done. I would encourage you to go and read this post with a little bit of thought process. You will learn a lot, right? So please go and read it. This is an interesting post. It will talk about the reality of IPO. So don't just believe that, you are just a regular investment. If we keep doing, our wealth will grow. It doesn't work that way. There is an important point that people miss, which is around like currency devaluation, right? So for example, INR keeps on falling, right? It has been falling at a dramatic pace, right? And every year, if it corrects by 3-4%, that's a return that you need to minus from your overall global returns. You'll say, I'm living in India. How does it matter? It matters to you. India is a net importer. Okay. So just because you don't understand this complicated macroeconomics, yeah, it will hurt your returns. Just understand it that investing is a global game. It's not a local game. FII का पैसा India आता है, India का पैसा बाहर जाता है, right? So everything is linked. So it impacts you. So in addition to money chasing growth stocks, what is happening is that money is also moving to other asset classes. This is again an important point. For example, recently in the US, you would have read that something called as Genius Act has been formed, which is Stablecoin Regulation Act. Now, as a result of that stablecoin coming onto the blockchain network, US government has now legalized the entire framework of stablecoin based companies to come and set up base in the US. So all these are important changes. A lot of money is flowing to cryptos. Similarly, you would have seen that gold has hit an all-time high. Silver has moved up, right? So all that is happening. That if India's stock market PE continues to be very high, we are going to move around just 25,000 mark. Please go and watch my videos from this year. I have categorically said that we will pivot around 25,000 plus minus 10%. That is the range we are going to move the entire year. That was my hypothesis. So far, it is working out well, right? So I hope that this point is clear. So if you are investing money in the stock markets right now, thinking that, I'm going to make like 20% quickly, right? Because market hasn't moved in 1 year, you might be disappointed with that. Okay. So that brings us to the final point, that what kind of expectations should I keep in the market, right? And what is the best investment strategy that I can follow as an SIP doer, right? That's one. And second is that if I'm an opportunistic investor like Akshat, okay, so this is like two type of people I'll speak about, right? So number one, right, if you're investing in the Indian stock market right now, your expectation should not be like, I'm talking about large cap. Please do not expect to make like between 10 to 13%, right? So this is the data that I will say. A lot of it depends on at what rate INR falls, right? So let's say like generally we fall 3%. So I'm assuming this return based on that. But if we fall 5% or more, right, then maybe this will be like, 15%, right? Why? Because you will be very happy, 15% return, but INR fell by 5% also. So whenever INR falls, it becomes cheaper to buy like Indian stocks. So a lot of foreign investors might buy, right? So that's how I'll put it. Okay. So then comes the second point that, okay, investment strategy. I'm an SIP doer. I get my salary every month. Let's say that I'm getting like, 1 lakh salary and 50,000 I earmark for investing in stocks every single month. So what should I do? Should I stop investing in Indian stocks? The short answer is no. Maybe you can run like something called as step up / step down SIP. Step down means that, for example, right now, right, when I showed you the initial chart, that the channel was like this, you were here. So here you can, because you are buying it from 2, 3 year, 4 year perspective, you can buy, right? You can do a full SIP here. Okay. So not a problem. And let's say if the market goes here, then should you buy it? No, wait, right, for 2, 3 months, 5 months, 6 months, because most likely what is going to happen is that we are likely to see like a box formation. This box has already been made for 1 year. Okay. So let me just take you to the chart just to conclude, right? So this is the chart that I was talking about, that, okay, this is the box formation, right? So it might form like this. Okay. So it might be something like this. So this has only been 1 year, right? If it goes for like 3 years, something like this, then issue is that if you're buying this right here, right, then you are going to lose. But if you're buying here, or these buying or support points, then you might still make decent amount of money, right? So my strategy in the Indian market, at least for the next few months, is that if I'll only buy if I get to buy something at decent valuation or some kind of support, right? So that's the only thing. It's a pure technical market right now. There is no fundamental push, because if you actually study what is happening from an economics point of view, there's hardly any discussion on economy. Some like random dude start like a $40 trillion economy will become, or $100 trillion will become. That's the only conversation that happens on the economy. Unless we genuinely cut taxes, give some breaks to people, I don't think any major kind of revolution is going to happen. So let's wait and watch. I think this is a very dull market, unfortunately, but I don't think that you should pull out investments. It does not make sense. Push would be that you would benefit more if you learn a little bit more about growth investing. For that, explore US. Do not run after like metals right now, except for maybe like buying a little bit of silver. That's fine. Other than that, like you just have to go through this consolidation phase. It's boring, but this is where good investors are made. So I'll really push you to study, improve your fundamentals during this time, and accordingly place your bets. Thank you so much for watching, and I'll see you soon.